All right, so the Dow futures are leading here. NASDAQ futures under a little bit of pressure, and that's likely because of yields. And it's also likely because, NASDAQ growth, Q's, technology, they've had a really nice run. This is where we finished up yesterday, NASDAQ down. End of quarter rebalancing actually still bleeds over into the first couple of trading days of the new year. What we saw was what many would describe as possibly window dressing with tech. Like I said, you guys remember when I said this a month ago? Do you really want to go into the end of the quarter if you're a fund manager not owning Amazon, Facebook, Google, Apple, Microsoft, NVIDIA, semiconductors? Do you really want to get in? That is exactly what we saw. We saw these fund managers, gobbling up tech and, putting a bid in the growth stocks. And the NASDAQ has greatly outperformed. The technology sector was the second best performing sector over the course of the Q2 period. We are done with Q2. Year to date, we've got more than a 14% rise in the S&P 500. We got nearly a 12% gain in the NASDAQ. So it's another good year. And usually the first half of the year, when it ends that well, when you have better than a 12.5% gain in the S&P 500 through the 6 months of the year, you typically tack on almost another 10% in the back half of the year. We'll see if history proves to be a reasonable guide. All right, so again, bond yields here, well off of their best level of the session. Europe is bouncing back. We've been green in the major averages in Europe. The DAX was actually up a good 0.7. Then it went red. There's been a lot of volatility there in the DAX, and now it's green again, up 0.4. Stock 600 almost up 0.5% there. Asia overnight, Hang Seng was closed, so that's actually yesterday's reading, but still more declines across most of Asia. South Korean Kospi down almost 0.5% there. Crypto's down again here. Bitcoin down 1,200 in the early going. Gold has a slight bid here. So does copper. Precious and industrial metals are slightly bid. Oil tipped over 75. Looks like it's $76 a barrel just about. Going gangbusters. So the energy complexes, cyclicals are probably going to have a really nice bid here today, barring any, potential disaster with jobless claims at the bottom of the hour, which should not see any such disasters. But it would, be nice to continue to see lower jobless claims. We had a slight tick up last week when the jobless claims were reported. We'll see if that reverts once again to the downside and back under 400,000 initial jobless claims. So we got that data coming out in about 8 minutes. But again, very strong bid across the energy this morning. Should put a bid in the cyclicals trade. The XLE, let's see what you got going on there in the pre-market. Yep, up almost $1 in the pre-market. Bed Bath & Beyond bid above 34 here. Upgrades, a lot of upgrades on Bed Bath & Beyond, so it serves to figure. Stock is getting a second, move here. Bear to just price target to 33 from 30. Maintains neutral rating. Telsey adjusts Bed Bath & Beyond price target to 35 from 30. Keeps market, which is their neutral rating. Again, I think this will just be opportunity. B. Riley starts Bed Bath & Beyond, $44 price target. Notes margin improvement from management initiatives. And they call out they basically call out in a positive way, the improvements to the online, elevating Bed Bath & Beyond status, for omni-channel, elevating it with all the initiatives that they put in. What I'd like to remind folks is they're literally giving that kind of a price target to where on the additional improvements to their omni-channel deliveries, where less than 10% of Bed Bath & Beyond's business is done historically. Like, seriously? It's less than 10% of Bed Bath & Beyond's business. What are you going to do about plugging the holes in the other 90% of the business? Like, that's not survivable. But I think this will just, be opportunity for us to, take another short on Bed Bath & Beyond again, as we did yesterday. As I said today, it wouldn't surprise me if we get an opportunity, 35s, if not 36s. Nice short squeeze, propelled it all the way up to 39 plus yesterday. So it wouldn't surprise me if that happened here again today. So again, looking at futures, NASDAQ futures, S&P 500 futures, a little bit of pressure there on the VIX, finishing at roughly, 1580s yesterday. So, after all that's been said and done in this market over the last, 15 months or so now, we're at the median for the VIX, which historically is not the stopping point. Stopping point is the mode. The VIX spends more time at its mode reading than it does its median reading. Median is more of an average, or mean is more of an average. The mode is where it spends the majority of its life cycle, going all the way back to the origination of the VIX in 1990. And that mode reading is between, 1250 and 13. All right, Apple moved higher again yesterday, under a little bit of pressure here this morning as the NASDAQ is under pressure. Micron reported after hours yesterday. It's bid down. It had actually been bid below $83 yesterday at its low point in the after hour session. Fantastic report. I mean, it was a great report. I don't know why it, fell and is still down, but I look at it as an opportunity to buy the dip in Micron. It was a fantastic report. Beats across the board, really good guidance. There really wasn't any flies on it. The only thing I can think of in terms of why it might be giving back some gains here is because it is indeed some gains here. If we look at MU, the recent price action on Micron, it's had a nice run here from 76, right, or 77, up to almost 85. It's a $9 rally in a little more than a week. So there's traders in there that are just taking profits, I think. If it wasn't a blowout quarter, if it wasn't a blowout move for the stock, you just see people peeling off some profits, in my opinion. Semiconductor ETF, down about $1 in the pre-market on the bid there. The SOX Philly Semiconductor ETF there, also down a little more than $1 in the pre-market. But again, I think this is largely predicated upon some early market indications back to cyclicals, away from tech as yields are rising, and just awaiting the data. 3 more minutes here. Don't forget, we also have data at 9:45, market PMI, and then at 10 o'clock, the ISM manufacturing PMI index. All coming out this morning. A lot of data today. All right, the latest AAII survey. Sentiment survey, you can see a really big jump in the bullish percent from 40 to 48. The average, the historical average, is 38. So it's nicely above even the historical average. But a big drop in the neutral sentiment from 36 to 29, and pretty steady on the bearish sentiment. So much of the gains from in the bullish sentiment came from the losses. The majority of the losses came from the neutral sentiment reading. We only dropped about a point in the bearish sentiment. I don't use this for much, but sometimes it's interesting. In my opinion, it's just a little superfluous data there. All right, so welcome to July, everybody. This is, of course, our POMO schedule. The Federal Reserve Bank of New York, which executes the permanent open market operations, hence the acronym POMO, permanent open market operations. This is essentially QE. These are the asset purchases on a daily basis by the Federal Reserve, the FOMC. So today, not much going on this, where are we, 7-1, only $2 billion worth of purchases, but tomorrow is the biggest at 12.42. So this is the bi-weekly calendar, comes out every 2 weeks. And you usually have two of these, big POMO days. Here's the other one, which is tomorrow. And the last time the market was down, only slightly, but more often than not. And for whatever reason, a lot of folks believe that institutions are using the sentimental excess liquidity on these big days to sell into. And that's why the majority of the time since April, when quantitative easing started back in April of last year, since April of last year, we've only been up, on this particular day 8 times out of about 30. So just keep that in mind. If we're down tomorrow, if we're down Friday, it's typical. But not always. We have been up 8 days. So we'll see. It's one of those useful but not so useful, variables of the market. It's not terribly actionable, in my opinion. You don't want to be selling or hedging for fear of that particular piece of quantitative data. All right, we're starting to lose ground here on futures. Once again, data has come out. Initial jobless claims are out, folks. Let's see what we got. Jobless, there we go. Okay. Continued claims, 3.49, a little bit higher than estimate. And that was a tick higher from 3.39 the previous week. It actually ticked a bit higher. U.S. initial jobless claims, 364. So that was much better than the forecast. And it was a nice drop from the previous reading of 411. So pretty good data there, I believe, in initial jobless claims. But once again, we still have more data coming. Oops. All right, a little bit of a reaction, but nothing to write home about. I think, on a day since jobless claims have been trending favorably for many, many, many months now, and we've had manufacturing data at, above 60 readings for several months now, I think most investors, most market watchers and market participants are actually eyeing the manufacturing data coming out later. And that's the data that could possibly affect bond yields. So we're holding steady after jobless claims on bond yield. We've literally done nothing. So I think that the bond market is awaiting that manufacturing data. They want to see if we've hit the peak in this particular manufacturing cycle. And as the service sector of the economy is reopening, more and more and more every single day of every week. You're up now. I pulled back a little bit there on the DAX. Any oil still going gangbusters. Slight pullback there. I think we did hit $76 here today. Gold still edging slightly higher there. Crypto is getting a little bit better. And again, the dollar's been down a little bit here this morning, but still above 92. I know a lot of folks are really getting excited and they think the bottom's in the dollar. I think anything but that. I think the dollar is giving people, a good opportunity if you're long, if you've been long, been enduring this dollar weakness over the last year. I think the dollar's giving you a good opportunity to get out in the 92 to 93 range, because I think it's going back down. I don't see the benefit of owning the dollar, of owning gold, precious metals, at basically the onset of a new expansion cycle. Could things get rocky, near term going into 2022? Absolutely. But do you want to be buying the dollar? Do you want your cash, to be used, your capital investment dollars to be buying, safe haven assets, or do you want to be buying risk assets? History tells us we should be buying risk assets, especially if they go on sale. Normal and expected pullbacks. Need to be buyers. All right, so we got an IPO today. Kind of wanted to talk about this. Now, some of you from Finom Group that have been here for a while, you've heard this before, but some of our newer members may not, and they may find it very interesting, especially if they're considering buying shares of Donut. I think that's the IPO. Let's get that. I'm actually thinking of buying for a swing trade of sorts here, MU, Micron here this morning, so I'm keeping my eye on it. I'd like to get it in the 82s, but I want to see how order flow goes over the first hour, see what kind of appetite there is, as it's already down here this morning. But the new IPO, let's get that on the watch list and see when it opens later today. I'll just take off GameStop for the day. It's DNUT, I believe. Yep. And it's been priced below the range. It was priced 20 to 24. It accepted $17 as the IPO price. So it's already got in bad shape so far as the original range. It had to be priced below the original range, which is not a good sign. But, and I did this kind of soliloquy out here on Twitter. Check it out, read it. If you follow me on Twitter, here's the opening. We'll start at the beginning. JAB Holdings, because that's the parent company. That's the company that bought. It's the conglomerate. It's a Luxembourg, basically investment type of company in the beverage and food service portfolio industry. They own, they bought Keurig Green Mountain in 2015. They bought Krispy Kreme. They bought Pete's Coffee. They bought Panera Bread Company, right? The restaurant chain in the United States that was doing fantastic before, the company got bought out by JAB Holdings. So here's kind of my story. Now, I used to be the lead consultant in quote unquote consigliere for the chairman of the board at AB InBev. And that was from 2015 to 2017. So I worked very close with AB InBev, numbers of projects, and just doing a whole lot of, I guess you could call it resourcing of new technologies for the company over those years, and working closely, with the chairman, who is also one of the founders of JAB Holdings. Now, this is a Luxembourg company. AB InBev, of course, is a Belgium, Dutch company, if you will. They're all very intertwined in that whole, region of Europe. So before I even came on board, I was a sell-side analyst for Capital Ladder Advisory Group, and we covered companies like Keurig Green Mountain. And Keurig Green Mountain by 2014 was in dire straits once again. The company's, flagship product, the Keurig coffee machine and K-Pods or K-Cups, all sales were falling. And we're talking double-digit sales, declining. The share price at one point, going into 2014, was 150 plus. And you had analysts talking about $175, $200 a share. what I was telling our clients at Capital Ladder Advisory Group, when we service the hedge fund industry and a few, smaller mom and pop, registered investment advisor firms and things like that, what I was informing them is, underneath the surface of the sales growth and earnings growth that was happening in 2013 going into 2014, and for much of 2014 was falling apart. There was a strong sales deceleration. There was a competitive disadvantage. There was a saturation of the distribution channels, meaning that the retailers and distribution partners were just flush with product, and it wasn't selling as quickly as it had in the past. There were cheaper alternatives. So again, you had this competitive issue that they were dealing with. And by late, 2014, you had a company that was in full-scale decline. They had a product called the Keurig Cold that they had partnered with Coca-Cola. Now, Keurig was going to develop this carbonated cold soft drink Keurig machine for your countertop. They were going to compete with SodaStream. SodaStream was the leader in that particular, cold, small appliance, carbonated beverage, do-it-yourself at home category. In fact, it was the only one in that category because anybody who had tried to come into the category previously failed and was pretty much out of the market within 6 months. Keurig had been developing this Keurig Cold product for about 3 years. How do I know? Because I was consulting for them since 2011 on the project. By 2013, I had, delivered my report to the board of directors at Keurig Green Mountain saying, it's not going to work, guys. You've already spent $1 billion on this. It's not going to work. It won't work. Okay, thanks, Seth. Here's your contract. Rip, rip, rip. Get out of the office and have a nice life. Like nobody wants to hear the truth. It literally did as much work as you can possibly do to develop, this system. And the main problem was not that the system couldn't work. It was that the cost for this type of device, a cold carbonated beverage device on your countertop, was going to be, upwards of $500. Unless the company decided, well, we want to get mass market adoption, so we'll underprice it and just take a loss on the machines in perpetuity until we get to scale. Well, the company had spent $1 billion, and it wasn't just their money. Remember, I had said Coca-Cola invested, a couple $1 billion into Keurig Green Mountain. They literally bought shares of Keurig Green Mountain, and their cost average was about $92 a share. Remember that number, write it down, put it in the chat box. I don't care what you do. Take a picture. You can't, okay? You get my point. Coca-Cola's dollar cost average after two tranches, two separate acquisitions was $92 a share. Now, Coca-Cola was sitting pretty when the stock went up to $150. They were looking great. And it was at this same time that Mukhtar Kent, which was the CEO of Coca-Cola, long-standing CEO, was having problems with his own business for a good decade, right? Coca-Cola sales were in the crapper. So far as organic sales growth in the crapper, volumes in the crapper for a decade. Why? Because, the whole diet thing had the aspartame and people didn't want to, because they thought it was a health concern. Not only that, you had a greater adoption of water and water flavor products. Water became the thing. Remember cocoa and coconut water? That was a big thing from 2012 to 2014. It's one of the reasons why Coca-Cola bought a coconut water beverage brand. But it didn't help. The only thing that helped Coca-Cola keep its head above water was raising prices. So you could show sales growth, but your volume was just decelerating year after year after year, declining, not decelerating, declining year after year for a decade. one of Warren Buffett's long, long only stocks forever and a day, is an absolute nightmare of a business model. But they could raise prices because they've got a loyal user base. Raise prices to offset the sales decline. So what do? If we're Mukhtar Kent, well, we take an investment in this company, which is developing this cold beverage appliance. And if we attach ourselves to that, and if they're developing carbonated beverages, let's give them the Coke recipe. So the new, Keurig pods for this particular cold beverage appliance will be all Coca-Cola brands. Now we've got a new revenue stream. But again, the problem was there was no way you could deliver this machine when it was a finished good for under $500. You can't scale that to the average household. They're not going to buy it. The pod itself would only deliver an 8-ounce glass. The cost per pod averaged $1.19. So you were going to pay $1.19 for a glass of Coca-Cola to come out of a Keurig appliance on your countertop. $1.19 per pod. And of course, everybody here in the trading room today, we only have one glass at dinner or at lunch, right? That's it. We have one glass. Of course not. It's ridiculous, right? That's why most people, they put the 2-liter bottle at the dinner table. But you'd be paying $1.19 for Sprite, Coke, Diet Coke, Orange Fanta. All of those brands were going to be on the Keurig platform for basically a $500 appliance. The logistics of the whole thing, the logic of a cold beverage appliance that delivered, a carbonated soft drink at the touch of a button, which took about 90 seconds, by the way. It still takes 90 seconds to pour out of the machine. That was on a good day, during testing and everything like that. All of our alpha trials and then beta testing, it took about 90 seconds. Whereas I open my refrigerator, open the cap or pop the can open, and I pour it into my glass in about 10 seconds. Is there something wrong with your refrigerator? You can't put, a 6-pack of Coca-Cola in your refrigerator, a 2-liter bottle in your, the whole logic of this kind of product was completely lost on Keurig Green Mountain at $500 a unit and $1.19 per pod. So, okay, you don't need me anymore. They pushed forward. They pushed forward with it anyways. In 2014, they delivered the webcast after the closing bell. Keurig Green Mountain, still trading as a publicly traded company in 2014, and they announced the pricing. They announced the pricing at $399. So they took my advice, which was to take a loss on it. They announced the pricing at $399, and per pod was about $1.20. Now, here was the other problem, the technology. And this was the biggest headwind we had for upwards of 3 years. You're using a thermodynamic block. You're basically, it's like what you have in your water coolers, right? Those office water coolers. You put the cup underneath, you press down on that nozzle lever thing, and the water comes out cold, the first one, right? Go back, you get a second one, it's still cold. By that third one, you start noticing it's not as cold as the first two. By the fourth one, it's basically room temperature. That's a thermo block cooling system, where around the reservoir it creates this block of ice so that it keeps the water chilled. But you use it too much and you chip away, and it basically chips away because you're heating up the system. Every time it's used, it heats up the system and it chips away at that ice. And so that was the other big problem. How is a family going to use this? Again, the logistics don't make any sense. You have a family of 4, mom, dad, and 2 kids. They all want a beverage. By the time you're done with that second cup, that third one's coming out a little bit warmer, and the fourth one, forget about it. And who's waiting 90 seconds at the machine to bring it to the dinner table for each glass? Like, none of it made sense. I wrote an article about this for a good 3-year period, warning people that this just does not make sense. The comments, the vitriol that I received, you wouldn't believe. You're just a bear. You're this, you're that. The first adopters will love it, blah, blah, blah. So the company did launch the product. And remember, during this webcast, when they announced the pricing, stock went down 20%. Like, most analysts are like, holy are you kidding me? Why would a family pay another, $400 for basically a refrigerator? Another refrigerator. Why would they do that? Another refrigerator on your countertop. Why would they do that? Stock went down 20%. Remember, this is a company that was trading at $150 a share early in 2014. Sales are declining. Earnings are declining. This product is supposed to be the savior, and it's not. They launched the product. Nobody's buying it. And the people that did buy it were having problems. The bottoms would leak. Within 6 months, Keurig took the product off the market. Sales continued to decline for its core flagship coffee makers and K-Cups. And when it was all said and done, now I was the only, right? I was being laughed at and I was being ridiculed, and I'm writing articles warning people about this situation that's developing. The stock's still above $100. It finally dips below $100. My price target, when Goldman Sachs, KeyBank, $150, $175 price targets from those two. My price target was $45. You don't think I was getting laughed at? You don't think I was getting called names? And I'm writing reports into the teeth of this climb all the way up to $150, sending them out to our clients, and getting on phone calls. Seth, don't you think you might be off sides with this one? And I didn't. I kept going back to the data. I'm like, look, guys, look, sales. Look at what's going on with their market share. Why do you think they're making all these licensing deals for K-Cups with Starbucks and all of these other brands? They're just clinging on. And the licensed brands don't make as much. They don't get as much. They have to pay a royalty to Starbucks. They have to pay a royalty to Lipton and Unilever for all of these licensed brands. And I'm trying. And again, it's hard. It's hard work being an analyst, a sell-side analyst. Now the stock's at $80. It's below the cost average that Coca-Cola invested. And nobody's buying the Keurig Cold. Only 2 retailers bought into it. One, who do you think? Who do you think the first retailer that bought into the product was? Put it in the chat box. Let's see if anybody gets it. Exactly. Thank you, Joel. Good call, sir. Everybody waits for Bed Bath & Beyond. They'll adopt anything. And, they looked at it as, we lost the Keurig coffee business to all the other retailers over the last 5 years. Here's our chance to get in on the ground floor with the next repeating, foot traffic and revenue stream via Keurig Cold. That was Bed Bath & Beyond's thinking. And I warned the buyers at the International Home and Houseware Show. I'm like, guys, You don't want anything to do with this. This is not the savior. I had a long discussion. We met. We had a sit down at lunch with the Bed Bath & Beyond kitchen appliance buyer. And I said, think about it. If you have a family of 4, how does this work to get everybody a beverage? Who's standing at that machine and then, walking the glass over, going back to the machine for the next one, 90-second intervals, because it's not like you press the button and it just pours out. It's automated. You press the button for automation. And either the system is ready or it's not. Sometimes it wasn't 90 seconds. Sometimes it was upwards of 4 minutes when we were doing beta testing. Bed Bath & Beyond buyer bought the product anyway. Not on scale. They only bought it for, to do pilot tests for, I think it was 50 stores around the nation. But again, it failed. So stock, Keurig Green Mountain share price is $80 a share. Mukhtar Kent, the CEO of Coca-Cola, is already under pressure from David Winters, who's an activist investor who had no appreciation for seeing the volume declines at Coca-Cola for a decade, and yet Mukhtar Kent, his compensation package does nothing but go up. The other executives does nothing but go up. He's putting all this pressure on Mukhtar Kent. And at $80, you don't have to take a write down on this. But now it's $60 a share and falling. Now it's $50 a share and falling. Breaks through 45, which was my price target, and I was invested short, and I got out. Kept falling. Fell to $39 a share before finally finding its base. And we're going into earnings season. How is Mukhtar Kent going to explain this? A couple months later, all of a sudden, Keurig Green Mountain is going to be acquired by JAB Holdings. In the all-cash transaction, Keurig Green Mountain shareholders will receive $92 a share. You think that's a friggin' coincidence? The purchase price, this is how you know something nefarious is going on here. The purchase price represents a premium of approximately 77.9% over the closing price of $51.70. Who the hell pays a nearly 80% premium on a company whose sales were declining double digits along with earnings? Who does that? Unless you were convinced by somebody else really friggin' big. What was Coca-Cola's price average? $92. Not a whisper from the SEC. Not a whisper from the FTC. Nothing. A couple months later, Coca-Cola CEO Mukhtar Kent retires. Really? Really? Now, the CEO of Keurig Green Mountain, guess where he came from? Anybody want to guess the company that he used to work for? His name was Brian Kelly. No, sorry, fat kitty. One more guess. The former CEO, close, Joel. You're on the other side. You're on the other side. So there leaves you only one more choice. No, Coca-Cola. He came from Coca-Cola. Brian Kelly came from Coca-Cola before he left Coca-Cola to become the CEO of Keurig Green Mountain. Now, here's the question. Why in the world would you go from a $50, $75 billion company like Coca-Cola? He was the president of Coca-Cola operations. He was in line to become the CEO of Coca-Cola at some point. if Mukhtar Kent left the company. Why would you leave and go to Keurig Green Mountain, which was basically a $4 to $5 billion company? Why would you do that? So, again, I had friends at all of these companies. This was my industry. This is what I did. There wasn't anybody that I didn't know, from top to the bottom. When I say the bottom, I mean like dock workers, that load up, all of the racks of Coca-Cola that go out, onto the Coca-Cola, the Pepsi trucks, so on and so forth. I knew everybody in Atlanta. What I found out was, and I didn't find it out firsthand, but I did make sure it got, I validated it. Brian Kelly, during his tenure at Coca-Cola, had an affair with somebody that worked in their logistics department. That affair resulted in a pregnancy. And Coca-Cola has very strict, fraternization policies. So if you're Coca-Cola, what do you do with this guy? Like, Keurig Green Mountain was in trouble in 2012. The stock price was upwards of 100 and plunged to $12.50 at its low. Like, what do you do with this guy who just had a baby, with an employee beneath him? I think it was around that time also that the Hewlett-Packard CEO, had to leave because of a relationship with an employee as well. Like, it was the height of that period. What do you do with this guy? Well, Keurig's in trouble. I got a guy that I want to keep with the company, but I can't. Let's see if we can't shop him over to Keurig Green Mountain. And it became my understanding that Brian Kelly never once stepped inside the Keurig Green Mountain headquarters to receive this job. Sight unseen, as they say. So that's kind of the background there. But again, JAB Holdings, right? Coca-Cola found itself in dire straits again, not with Brian Kelly as a person, but with his company. For a second time, they've had problems now surrounding Brian Kelly. And they found a lifeline in JAB to make them whole. Not just make them whole, but they actually made a little bit of money on that investment because Keurig had a dividend at the time, 25 cents a share. And they owned the shares for a good year. So they actually made a little bit of money. But again, my question is, like, why would you pay 80%? Like, where is your leverage? How are you going to make this work? As a European investment, how are you going to make this work? It didn't. Keurig Green Mountain share sales continued to tumble even after this, acquisition by JAB. It became private. It was, delisted. It became a private company. Sales continued to decline. And then 2 years ago, they merged it. JAB was able to merge Keurig Green Mountain with Dr. Pepper Snapple Group. It's now Keurig Dr. Pepper. So they basically were able to unload this company onto the US markets once again. And what are they doing today? They're unloading Krispy Kreme. Krispy Kreme was just a disaster of a company, for a good 10 years until JAB Holdings bought them for $1.35 billion in 2016. And here we are once again. They're unloading this back onto the US markets. JAB Holdings also bought Panera Bread. Now look what they're doing with Panera Bread. They just refinanced for nearly $1 billion. the only reason you're doing that now, if you're JAB Holdings, is probably to unload that as an IPO once again onto the US markets. Like, this is all the stuff that JAB Holdings has been doing, and yet no regulators. No regulators. Nobody questioned the acquisition of Panera Bread. And I think that was 2016 as well, 2016 or 2017. It's just a very, very dicey dynamic there. So in terms of, Krispy Kreme's IPO here today, like, I want nothing to do with it. I'll never want anything to do with it. Whatever happened during the ownership by JAB Holdings, like, if things were going so great with all of these companies, why have you always unloaded? There's no possibility that JAB Holdings was able to recoup the $13.9 billion that they paid for Keurig Green Mountain in 5 years. There's no possibility of that. They got to a point where they realized, obviously, that they were never going to recoup that, that capital investment. So they unloaded it. What do you think they're doing with these other companies? There's a reason why Krispy Kreme had to file bankruptcy already once during its lifetime. I love donuts. Are you kidding me? I love Dunkin' Donuts. The strawberry top ones with the sprinkles, and the ones with the pudding inside, the vanilla pudding inside. Those are my donuts of choice. So I hope you guys enjoyed that story. But in terms of, folks always seem to find themselves of the opinion that these big multinational conglomerates are above reproach, right? They're doing everything on the level, right? Some of the things that I've seen as a sell-side analyst, in my time, you just wouldn't believe. From Nestle, Coca-Cola, Pepsi, just a number of Research in Motion back in the day. BlackBerry, for those of you. Yeah. For you millennials, BlackBerry. No. Like, some of the things these companies do are really, really under the radar and sketchy. I can only call them sketchy because there has not been litigation. There has not been, indictments and things of that nature against any of these individuals or companies. That doesn't mean that they're exonerated from, malfeasance. With that being said, 9:07, we got about 23 minutes now until the market opens.